On this episode, we have an exciting guest this week. Chad Hart, Iowa State University Extension economist, joins us to talk about the current crop market outlook. Have you liked and followed all of our social media pages? Make sure you are connected so that you don't miss any updates. All of our links are in the description below.
Hi, this is Joe Mershman. Welcome to Cup of Joe, episode number 41, season 2. Today we have our regulars. We have Turk and we have Tommy and Ben, but we have a special guest, Chad Hart from Iowa State University, extension economist. I know out there in the farm area, he is also one of the most respected individuals when it comes to understanding the markets and the impact it can have on farmers. And sometimes he tells the truth so well that he's sometimes referred to as Dr. Doom, but I found him always to be very positive and kind of refocuses your mind on what really is going on out there and not necessarily listen to all the chaos that's around us. So we're going to start with Dr. Hart today and let him explain some of the things that are going on as far as the dynamics of corn and soybean pricing and livestock pricing. So I'm just going to turn it over to you, Dr. Hart, and let you start talking about some of the things that farmers need to be thinking about right now and what's going on and what could potentially happen.
Well, I think when we're looking at our crop markets, the idea is that what COVID-19 has done thus far is it's really knocked us down. And it's done that through not only just the virus itself, but the restrictions we've placed on ourselves in order to try to control it. So we've been driving less. We have stopped eating at restaurants and started eating more at home and done lots of changes in our lives that has reduced demand for agricultural products across the board. So we've seen corn and soybean and beef and pork prices fall fairly dramatically here over the first 4 months of 2020. What I'm going to do is I'm going to sort of take off my Dr. Doom hat and try to point folks to the positive side right now. When you think about what's happening, we have sort of taken the training wheels off now, and now we're getting ready to try to reopen our economy. And so what that should mean for us is that we start to rebuild those demand structures for our agricultural products. We'll start to drive more. We're starting to open those restaurants. And what that should mean is that we're setting up to start to rally these agricultural markets. And I think that's what you've been seeing in the futures markets over especially the past week, as we've been adding a little bit to price, sort of feeling out how things are going to go here, hopefully setting us up for that potential for I won't call it a seasonal rally, but close to one. When you think about the May-June timeframe, that's when we do tend to see our highest prices of the year traditionally, and it's often driven by a combination of some weather concerns that we might have, for example, the freeze warning we've got coming up tonight, along with usually a spur from summer demand. And so I'm looking for that same sort of pattern to try to build in here as we go forward, especially over the next, I'm going to say 4 to 6 weeks. I fall back on those seasonal patterns. And when you look at the seasonal patterns over the last 40 years, your best pricing days tend to be around Father's Day. And I think we could look to see a rally that, builds up around Father's Day, sort of, again, a traditional pattern if we can begin to reopen the economy like we have been.
Well, China is always a big name in markets, and what do you think's going on there? We have some political things going on, and a lot of finger pointing and whatnot. So, what do you think their demand? Are they going to meet their phase one demand numbers?
Well, I'd say they're working on it. They're not quite on pace to meet those phase one numbers, but they are buying more. I was just looking at the weekly export data yesterday. And when you look at what we're seeing so far, we are seeing China step up in several markets. They have returned to being our top soybean market. And in fact, we're up about 2% year over year in our sales to them. And so we're seeing some positive movement there, but where I've been seeing, let's call it the most positive movement, is in markets where China hasn't traditionally been a buyer. For example, the beef market. China had shut us out for over a decade. They're starting to buy some beef now. They have grown to be our top export pork market. African swine fever really hit them, and guess what? They did turn to the US and have bought a tremendous amount of pork. In fact, our sales to them are almost triple what they were last year. And when you look at the corn market, again, another market where China is not traditionally a buyer from us, but so far, especially over the past couple of months, they have been making purchases and now are our sixth largest export market for soybean or for corn. And so you're seeing China, let's call it, start to chisel away at what they need to do for the phase one agreement. I'll agree, they're not on the pace to get to where they're supposed to be, but at the same time, my expectation was that China would sort of wait to the second half of this year to really make a lot of purchases because it lines up with their demand. If you think about when they would buy, when they were big in our soybean market, when they were 60% of it, when did they make the bulk of those sales? They were buying them September, October, November. Expect the same thing as we're moving forward this year.
Let's talk a little bit about the livestock sector. It's all disrupted. You know, the meat shortages, you're reading in the headlines today, you know, we're not going to have meat at grocery stores. Some grocery stores are limiting how much you can purchase. Can you tell us a little bit about what you see in that sector?
And when we're looking there, I mean, I think, saying that, there's a meat shortage, it's both correct and incorrect. What we're going to see are spot shortages in some products in some areas. But when you're looking at what we've got in terms of meat, what we've got right now is a temporary disruption to the supply chain. We've got a lot of animals on hand. Right now, those animals are backing up because we can't process them quickly enough. But as we process, we're fulfilling that consumer demand actually fairly well. And when you look at how we're trying to manage COVID-19 at our packing plants, especially here in the state of Iowa, we have rededicated to making sure that those processing plants are running at an efficient manner, but also protecting those workers to make sure that they can process that meat. It takes time though. And so, what we're doing, I've argued is sort of replumbing, if you will, the meat supply chain. We're having to rearrange how we process meats on the fly while still processing a tremendous number of animals and meet consumer demands. We're going to have some glitches in the system like we have that create some shortages. But when it comes down to it, we'll get those things worked out. And what we're seeing at the grocery store right now, it will last for a few weeks. It won't last much longer than that.
So which commodity right now do you think has the most potential to go up or to get into the profitable sector?
Tell you the truth, this is kind of weird to say, but I'm going to tell you right now, it's actually corn. And here's why. When you look at pricing, I think a lot of folks have been leaning towards beans. And it's true, I think we've seen a fair amount of shifting of acres from corn to beans, if you will look at the planting progress. But when I look at the futures market and the way it's, propping up right now, corn has been holding at a level just below break even as far as our Iowa State production cost. Soybeans are down about 50 cents below break even. So even though corn has taken the bigger hit here through COVID-19, it is still, as far as the margin is concerned, the better looking crop right now.
Does anybody else have a question for Dr. Hart?
Chad, I got a question for you.
Shoot.
With the coronavirus and you're talking about a temporary disruption in the markets, how long do you think the ripple effect is going to take place or that we're going to see coming from this temporary disruption?
We're going to see, this is going to have impacts for quite some time. And arguably the biggest area is on the livestock side. When you think about how we've sort of stacked these animals back up because of the disruption at the processing facilities, we're going to be feeling this literally for the rest of the year because it's going to take time to sort that system out again. Just think about the Waterloo plant up there that Tyson had.
Right.
You're talking about backing up basically 20,000 animals a day, every day, just at that one plant.
They did that for 2 weeks, I believe, right?
Yep, they were down for 2 weeks. And think about it, they weren't the only big one down. You had Worthington, Minnesota, you had Sioux Falls, South Dakota. We had the plant down here in Perry down for a while. So the idea is that we had a major disruption there for a concentrated amount of time. But what that meant is there were literally hundreds of thousands of animals that got backed up in the system. And we're still backing them up today. And they're animals that, they're already born, they're here, we're going to have to deal with them. It's going to be months as we work through the system and deal with them.
Chad, we had a local farmer that raises hogs, and he told us yesterday that, if you have a contract to produce in so many hogs, per week or whatever it is, they were taking those hogs, but if you had surplus, if you paid the freight, they would take the animals, give you nothing for them.
And that's the issue we're running into is they just don't have the shackle space right now to deal with these animals. So if you think about it, that extra animal right now has next to no value because we just can't process it. And so that's what we're trying to do is sort of, if you say, hold off those animals, the longer we can hold them off the market, the more we take stress off the system. I'm going to turn this around. So, in COVID-19, they talk about flattening the curve in order to preserve hospital beds. We're sort of trying to do the same thing with our livestock industry. We're trying to flatten the curve, slow the animals down so that we make sure we have enough shackle space to process all the animals that we have available. And so that's what's happening right now. We don't want to rush animals forward. We can't handle them all. How do we slow them down?
Chad, is this affecting the birthing, the new animals coming into the system? Have farmers cut back on their herds or what they're producing?
Yep, no, it's definitely going to affect breeding rates as we're looking forward as well, because again, we're trying to figure out how to slow things down. And so that means we're looking at not only the animals we have right now, but thinking about, that next turn that we would have. And we're likely going to cut down on that, at least here in the short term, to make sure that we can get things back up closer to normal and then try to ramp back up again. One of the reasons I'm sort of optimistic, though, goes back to when you look at the demand for those animals and demand for meat. It remains strong. And in fact, when you look at exports on the meat side, we're still running at record export pace. That says there's really good, strong global demand for meat that will help that industry rebuild once we get to the point where we can process appropriately.
Chad, let's switch gears a little bit and talk about the price of oil and ethanol and all those relationships and where that's going and what could happen.
So on the price of oil, like if you think the crop or livestock markets have fallen dramatically, energy has been even worse. We've seen at one time, oil prices went negative. And so it's a combination of factors there. It's not just COVID-19 that's hit our energy markets. Actually, there was you had sort of an energy surplus as we came into 2020. You had Saudi Arabia and Russia basically getting a fight over what production levels would be. And so they both ramped up oil production, sending that market crashing even before COVID-19 hit. And so what that did to ethanol is ethanol's always competing with gasoline at the marketplace. So as oil drops, gas drops. As gas drops, ethanol had to drop to compensate. And so we saw the economic conditions for the ethanol industry deteriorate throughout this first part of 2020. And it, like I say, it wasn't just COVID-19 here. But when COVID-19 hit, what it did was it hit the demand side of the fuel market. People were told to shelter in place, stay at home. Businesses and restaurants were closed. That meant travel dropped dramatically. In fact, I know we went through 1 week there where basically our gasoline usage was the lowest it had ever been in 50 years. And as a guy who's 50 years old, I'm sitting here going, great, you were telling me we're driving like when I was born. That was an incredible change in demand. Whenever you've got demand dropping to record lows and you've got supplies at record highs, that's how you get a 60% price drop in the market. And so definitely ethanol took it on the chin. We've seen plants shut down. We've seen even more slow down. Right now, we're probably running at 50% capacity across the nation as far as the ethanol industry is concerned. And hopefully they have found, if you will, the bottom of this cycle. Now that we're starting to reopen the economy, we have seen fuel usage start to ratchet back up. We have seen ethanol stocks come down for the past 2 weeks. And we've seen our ethanol production stabilize at about this 50% level right now. What I am hoping for, and again, what I'm looking for here is that as we continue to reopen, we should continue to see fuel usage grow, those stocks continue to burn down, and that would give the room to the ethanol industry to restart some of those plants.
Yeah, I was talking to one of the directors of our local plant here in Burlington, Iowa, and they said they're basically running at 50% capacity, and they're utilizing this time to do maintenance on, I guess their plant has like two halves. So one half they're doing maintenance on, getting ready to go again, and the other half is actually running. So some of the plants are taking advantage of this to do a major tune-up and get even more efficient producing ethanols.
And that's the deal. I would say you typically at an ethanol plant see them slow down at least once a year, if not twice a year, to sort of retool and do some maintenance. And so the plants that are still running are using this opportunity to do that. That's also a sign that that ethanol plant still has some storage capacity left to it. I know a fair number of the plants that shut down actually shut down because they just ran out of space to store the ethanol. They literally filled up their tankers, filled up what rail cars they could get access to. And I had one general manager joke that he's like, we filled up the coffee cups in the break room. We were running out of places to put ethanol.
I hope that the saying, this too will pass, continues to come into play, because it is made for a lot of stress for our farmers and even consumers, and in fact our entire country, as we try to sort out what's the next phase. But some of the things that I've been seeing is saying that if you're outside, you're pretty darn safe. In fact, maybe staying inside's the worst thing you can do when it comes to the spread of this virus. So I guess those spring break kids down in Florida they had it right. So stay outside.
They got some of it right, I think. And so when we're looking here, it's a matter of we've got to continue to try to live our lives. And that means there's always some risk in life. It's a matter of just being smart about it. We've been told, okay, social distance a bit. Okay, fine. But you don't have to take it to the extreme. Wash your hands. Basically it's just, sort of being smart about how we do the things we do. And as we reopen, I think that's the deal. We're finding out, okay, this works well, this doesn't work well. But we're figuring out how to get our economy re-going again and to get our businesses restarted. And that's where we're in the process of it now. And I believe that we'll continue to build and grow on that. And that's, again, another reason why I'm looking for that potential for a spring rally as we get deeper, especially into June.
Well, you're not living up to your reputation of Dr. Doom, so we're kind of happy about that today. So things are going to get better.
I joke that I tell people my job is to sort of knock you down when things are going okay, but to build you back up again when we're at the bottom. And I'm hoping we're at the bottom.
Well, great. Any other questions for Dr. Hart?
I did have a question about soybean exports. Seems like about a year ago, all we talked about is how China wasn't buying anything, and we had a lot of demand from other countries. How are those other countries doing now? Have they continued to buy, or have they backed off?
We've seen them slip off. When you look, what happened was you're kind of right. China was the big dog in the market. When they pulled back, we saw other markets like Europe and Mexico really take off and sort of try to help us fill in the hole. As China's reemerged, those other markets have sort of backed off, especially the big two there, European Union and Mexico. That said, though, what I've been watching is we are starting to see some recovery in some smaller markets. Probably the biggest mover right now is Egypt. They've actually come up the chain, and now they're our fourth largest export market for soybeans. If you've seen me in the past, when Egypt shows up in my export markets on that graph, it usually indicates that you're really close to a price low, because Egypt is known as a bargain buyer. When they see an opportunity in a feed market at a relatively inexpensive price, they jump on it. And we've seen them, especially over the past month, move really strongly into soybeans.
Well, that's great. That's great news. I remember you talking about Egypt, and that's like a leading indicator of the low. So that's great news. Well, we sincerely appreciate you taking time out to give us an update on Cup of Joe, and we hope we can have you back again, because I know our farmer customers that have ever heard you speak in person, they just absolutely love your style of delivery and the information that you give. So we definitely appreciate it, and we hope we can have you back again.
It was my pleasure to do this. I'd love to do it anytime. Thank you.
Thank you. One of the last things I'd just like to comment on, I know this morning we're very concerned about how cold it got and what the potential damage is to our crops, and that's going to take 3 or 4 days to really figure out. But keep in mind that air temperatures are taken above ground. They're not taken at ground level. So we have a lot of radiant heat coming off our soil right now. So it's not necessarily all going to be as bad as it sounds if it did get down to 32 or even 31 in your area. So we'll have to see what happens here, but it will take 3 or 4 days. So we'll know next week if there was any damage and what that's going to impact. So I'll wrap up today with our joke of the day, and this one here is a teacher joke. We always like teacher jokes. A teacher asked her students to use the word beans in a sentence, and I thought that was appropriate since we're a soybean company, So this is what the response she got. The first one said, "My father grows beans," said one girl. "My mother cooks beans," said a boy. And a third student spoke up and said, "We are all human beings." Well, hopefully that'll get you to next week, and we thank you for watching today, and hopefully you found some of the information valuable, and want you to be safe and healthy, and we'll see you next week. Take care.